gold could still shoot dramatically higher, potentially another 10, 15% from where we are. So I really like the, excuse me, I really like this space. I own a lot of physical gold and silver. And I mean, who doesn't? We've been waiting for, really this big rocket ship kind of rally for a long time, it feels like. And now silver is about to hit new all-time highs, which is pretty darn exciting. If silver and gold, continue to push higher, obviously that pullback level moves up with it. So, that starts to get up into the 45 range, 46 range. So it just depends on where silver puts in a top.
Gold's remarkable ascent has entered a pivotal stage, pushing to new record highs and signaling what many see as the beginning of a lasting structural transformation in global markets. While some traders view the metal as technically overextended, deeper analysis suggests the rally is underpinned by solid fundamentals. Chart patterns reveal a strong base forming just beneath major resistance levels, the kind of setup that historically precedes another powerful leg higher. Rather than a speculative blow-off, this move reflects expanding institutional interest, with futures volume and mining equities both showing significant inflows. Many in the market now interpret this as part of a long-term revaluation of gold's role in the global financial system rather than a temporary price spike. Market strategist Chris Vermeulen points out that the driving force behind this momentum is not just technical strength, but a fundamental shift in investor psychology. He describes a confidence migration, a steady flow of capital away from fiat currencies and debt-based assets into tangible stores of value like gold and silver. Mounting sovereign debt, currency debasement, and geopolitical tensions are eroding faith in traditional financial structures, prompting investors to seek safety in hard assets. According to Vermeulen, this phase marks the early foundation of a structural bull market in precious metals. Corrections, he argues, should be seen as healthy recalibrations that allow the market to gather strength before launching into the next wave of gains. Silver's behavior has mirrored gold's resilience, but with greater volatility and an even more dynamic potential upside. Its long-term technical setup suggests that a breakout could be imminent, fueled by both industrial demand and its appeal as a monetary hedge. The tightening supply chain and rising investment demand have positioned silver as a key beneficiary of the broader move toward real assets. While speculative interest has intensified, Vermeulen emphasizes that silver's trajectory is supported by genuine structural forces, not short-lived enthusiasm. Now, we bring you the highlights from Vermeulen's latest insights on gold and silver. Before we proceed, make sure to subscribe to our channel and turn on the notification bell so you never miss an important market update. Thank you, and enjoy the video.
We're kind of into new territory based on how I chart things. So we hit a target at, 4,100, 4,000, like $80 is kind of the next measured move based on Fibonacci extensions, which you and I have talked about when we Fibonacci theory usually is pretty darn accurate when it comes to predicting forward targets where resistance is going to hit. So just based on this price action, we more or less have 4,090, 4,080, give or take, to the upside, where gold is probably going to run into a little bit of a ceiling and start to have a bit of a pause or a pullback. So what this is showing us is just based on the last major rally to the upside and then the multi-month pullback, it's telling us we should go up to the 618 level, which is known as the golden ratio. And typically, if price pauses at the golden ratio of 618, it's usually going to go up for that full 100% measured move, meaning whatever this distance was on the first half, we're going to see that second half happen as well. So we're just getting to this point. In fact, we just hit a target, as you and I are speaking today, on a gold trade, a specific short-term trade, because we are now at that point where, hey, gold might actually pull back and have a little bit of a pause and pullback for potentially even a couple weeks. It might even be, just a few days, but overall, this is a technical point. So I like gold, I like silver, but they are feeling a little crowded. Look at the volume on the gold futures. It's just kind of ramping up. It's pretty much all green. Almost every day we're seeing gold, silver, and miners move higher. And that's just because we're in that perfect storm where the stars align and there's enough people naturally gravitating. It's almost like when a planet starts to get big enough, it gets a bigger magnetic pull, or like a city, like a magnetic city pulls in people interested in that space. And that's what gold is doing. It's shining so bright in miners and silver that it's really just kind of the beacon. Everybody's hearing about it in the news and they want to be part of it. And we see that in the volume. And to me, that's a sign that it's a little bit overdone and we're at a target. And that's typically what happens is we get this sense, this feeling just as things go to take a little bit of a pause. But I do think gold could still shoot dramatically higher, potentially another 10-15% from where we are. So I really like the, excuse me, I really like this space. I own a lot of physical gold and silver. And I mean, who doesn't? We've been waiting for, really this big rocket ship kind of rally for a long time, it feels like. And now silver is about to hit new all-time highs, which is pretty darn exciting. If we go back and this goes all the way back to the 2011 peak in silver, and this is kind of the same. So I'll just quickly pull up the chart of gold and just look at the price action, the parabolic, the straight up moves. If we look at gold, it's shooting straight up the right hand side of the chart. If we go and we look at, for example, gold miners like GDX, it's gone parabolic. I mean, it's they're golden rocket ships. They're just taking off. Same with silver miners. And so if we go back to look at silver, this is the thing. Usually things that go straight up are going to, once they do put in a top, they're going to come straight back down for at least half of that move. So again, the technicals right now for gold are hitting a key level where we might see it push a little bit higher temporarily, but overall, gold is at a resistance level based on Fibonacci, which I find is one of the most powerful tools for finding upside resistance levels or hidden resistance levels. And then silver is tagging a double top here. I do think silver is going to want to try and hit an all-time high first, but overall, it is also at resistance as a huge double top. So, there's a bit of a warning sign in the short term saying, hey, I mean, I wouldn't really buy right now. I think waiting a week or so or a couple of weeks to let this have a little bit of a pause or pullback. Because if we do get a sideways pause here, if it holds up really nicely over the next week or two, we could see another explosive move in silver and gold. We could see silver shoot up into the 80s. Like, I mean, we could see this crazy parabolic spike, right? So that's what's really exciting about it is there's a lot of built up energy. People in the precious metal space have been waiting for this run in silver, gold, and miners. Like a decade, it feels like more or less. And then suddenly out of nowhere, if we go and look at the large cap gold stocks, you wait since you wait 14 years, finally gold stocks are breaking out. And this is the monthly chart. And this is the thing, people wait so long in the precious metal space to get back to where they were a long time ago. And then we get this huge rally and nobody wants to exit positions right now because they're like, it just started, I just started making money in some cases. But this is the problem, is rallies happen very quickly. So I love the precious metal space. I do think it's getting a little frothy. I think a little bit of a pause or pullback is a good thing. But I long-term wise, I mean, I'm very, very bullish on gold and silver. I think they'll go dramatically higher, and the miners eventually as well. If we zoom into the intraday charts or even the daily chart here, we're starting to get into what is called a running correction. So it's channeling higher and it's kind of ping-ponging around back and forth from one end to the other. And generally, you want to see price run up, and then you want to see it kind of flag and take a bit of a breather, and then you want to see the second half of the move. Those are bullish chart price actions patterns. When it's doing a running correction, what it's saying is volatility is increasing. Usually, volume is increasing as well, and it's a battle between people piling in FOMO and then also people taking bouts of profit selling. And so that's what's happening. And the problem with this chart pattern, and this is the silver chart, is that you don't know which way it's going to break. It's a very explosive pattern. And a lot of times it'll usually have a quick, strong pop to the upside, but then it'll actually crack to the downside and have a bigger correction. So, whenever it does put in a reversal candle, like when it does roll over, then we can use Fibonacci retracements, which a retracement tells us based on Fibonacci theory where price should pull back to. So based on this last run up, if this is the high where we're at right now, for example, it's going to want to naturally pull back down to the 38% retracement level or down to the 50%. So this will be the sweet spot down here where it could actually shake people up and shake things up and reset, which is $42 to $44. And that'll definitely, spark a lot of selling. That'll spark anybody who's been piling in this running correction who feel like they're missing out and they're getting in late, more or less at this point. This will probably cleanse them. It'll spook them out. They'll be like, why do I always buy the high? So that's the sweet spot at this point, is around 42 to 44. But again, if silver and gold, continue to push higher, obviously that pullback level moves up with it. So, that starts to get up into the 45 range, 46 range. So it just depends on where silver puts in a top and then reverses down. Then we can calculate where momentum should naturally stall out, the selling momentum, and where buyers should start to step in.
Now, when it comes to the retail space, what I've found interesting is really up until September, it was eerily quiet, but then it really started to pick up, especially in the last couple weeks here. It's been quite busy. Your take on that, the retail involvement, it seems like the public is kind of just getting involved now.
Mhm. And that's the way I see it. I don't have the full charts up here, but if we were to go back and compare 2007, just as gold and silver were rocketing higher and the stock market was just about to put in a major top, we're in a very similar situation. You and I have kind of covered this comparison chart in the past. But what's interesting, as you just mentioned, the retail investor is just starting to get hot and heavy about this. They're just starting to move in, which is why we see a lot of volume in the precious metal space and the ETFs. One other thing that really sparks is obviously miners have taken off, and that's people wanting to make as much as they can. They want to play the leverage play on physical metals. But we're also seeing platinum and palladium. In both of these, this is the daily chart, just started really taking off like 2 weeks ago, 3 weeks ago. If we look at palladium, it's up 7.5% today. This is the exact type of price action that happens when the mass psychology, they all just want into the precious metals space. And this is what we saw in 2007. We saw miners finally start to outperform. We saw platinum and palladium come to life and rocket higher with volume. And that tells us retail traders are now piling in. They're chasing. It's a FOMO trade. And you just have to let this rally and this little bit of a bubble, short-term bubble, continue to play out. You do not want to step in front of this because who knows how high it could spike. We're in a perfect storm for metals to just keep running higher and higher.
The resurgence of retail investors, surging ETF inflows, and the sharp rise in platinum and palladium prices signal that enthusiasm for precious metals has entered a euphoric phase. This atmosphere bears striking similarities to the final stretch of the 2007 and 2008 cycle, when widespread excitement turned metals into a speculative hotspot. Platinum's breakout from its long-term base and palladium's swift recovery highlight the intensity of current speculative energy sweeping through the sector. Yet, as Chris Vermeulen notes, this is precisely the stage when discipline becomes crucial. Rather than chasing short-term spikes, allowing markets to breathe through natural corrections is essential for building lasting strength. Temporary pullbacks serve as healthy resets, cooling sentiment, and laying firmer groundwork for the next sustained uptrend. Looking ahead, the long-term outlook for precious metals remains decisively bullish. With global debt mounting, currencies weakening, and public confidence in central banks eroding, the stage is set for a structural repricing of gold and silver. Capital continues to migrate away from paper instruments toward tangible stores of value, reinforcing the metal's position at the core of a shifting monetary system. Technical indicators, capital flows, and historical precedents all suggest that the next expansion phase could push gold beyond $5,000 and silver well past $80 over time. The journey will include pauses and corrections, but the broader trajectory points unmistakably toward a new era, one defined by the return of real value and the gradual unwinding of decades of financial excess.
I think one of them is what we've already covered, which is you see miners, you see platinum and palladium come to life with big volume. That's usually a very good indicator because now everybody's looking for anything in the precious metal space. We are seeing, the US dollar, the currency is out of favor. It's like one of the most hated currencies, it seems, and everybody thinks it's going to collapse, and it will probably eventually. It's a fiat currency. But this is the type of scenario where everybody, just wants in the precious metal space. They think the dollar is going to collapse even more. And, people we're starting to just see signs that the economy, I think, is going to start to stall out just based on sentiment and things. Like if we look at, I have this sentiment chart here. This is color coding the market of what big money investors are doing with their money. And more or less, big money investors right now, these red and orange bars are telling us there's danger. They're being defensive. They're being protective. The last time we saw something like this was right over here. We saw the stock market move higher. This was all-time highs on the stock market. And then, of course, we went into a huge sell-off. There was a tariff event. And so we're seeing something similar right now where big money is not really fully engaging here. The money flowing into this market isn't so much the Magnificent Seven. They've been all trading sideways for like the past month. It's money's piling into small caps and micro cap stocks. And that's telling us that's the retail trader. They're like, get me into these tiny little companies. I want to ride this bull market. I want to make big money. And that to me is a contrarian indicator. When everyone is piling into what is the most volatile stuff, that is a sign that, okay, that's the last people moving in. And they usually are very close to buying at a high. And they usually don't have an exit strategy because they don't think the market is rolling over. They think we're starting a new bull market and we're going to continue higher for years. So that's it from a high level of how I see and feel the momentum of money flowing in the markets. I don't really cover the economic and the fundamental data too much. I really stick to the charts and the money flows. The money flows tell me what people are thinking and doing with their money. That to me is more important than what the headline news is or what the Fed is doing. Platinum's gone through a pretty big phase. I remember a long, long time ago, everybody wanted platinum because it was worth more than gold. And then platinum just fell out of favor. And it's been in what is called a more or less a stage one base, which is kind of a dead zone. You and I have shared this. If we look at the stages of the market, it's in a stage one basing, which I shade red. It's a sideways point in the market. It's dead money. You just kind of ignore it until it starts a stage two bull market. And so we have now seen platinum break out of that. Volume is back into this space. And if we just kind of fast forward to the price action that we're at now, we can get an idea of where platinum might run out of steam. Using Fibonacci, we can take this low, we can go up to the high, and based on the strength of this pullback, it's going to tell us where these next levels are for platinum. So the general rule is if price comes up to around the 618 and has some type of pause or hiccup, it means that's a pretty good gauge of the overall resistance level. And then if it can break through that, then we're probably going to head up to the next level, which is $1,900 an ounce. So it still has room to run. I don't know what that is percentage wise. We can take a quick look, but it's about a 12% upside, and that would complete this chart pattern and bring us into a kind of an invisible resistance area on the chart. I mean, it's carved out a bottom. It put in a big base. It took years to unfold here, a couple of years, and then now it's working its way higher. And again, if you just look visually at that chart, what happens every time when we see a great big parabolic spike in an asset class or even palladium here? It pops straight up. It'll eventually run out of steam, and then it rolls over and fizzles out. So this is kind of where we are in a nutshell in the precious metal space. Everything has just had one of these kind of mini parabolic pops and bubbles. And the question is, when does the retail trader who's going to get into gold right now, when do they run out? When are they finished buying? And that's when we're going to run out of steam. We just don't know how big of a herd it is. Are we just starting that train, which a lot of people believe, and there's millions and millions of investors that haven't even started to get into it? Or are the people who are actually, interested in getting into gold just getting in now and there's not many left? That's the big question. The price action is telling us we're really close to running out of buyers for precious metals. Everybody's been accumulating it. Now it's the feeding frenzy zone. This is kind of the euphoric phase, which you and I have touched on before, Elijah. If we look at the emotions of the markets, we're in this euphoric phase where things just shoot higher and everybody's like, I'm a genius. I'm everything I do is making money. I'm richer than I've ever been. But after good times usually comes difficult times. And that's what people don't prepare for. They think when things are going really well, they're going to continue. And then usually they get caught holding something that eventually pulls back, and it could take years to recover from. So that's kind of the precious metal space in a nutshell. Is it's a little frothy, but there's no doubt it's in a strong uptrend. It needs a bit of a breather though.
If current trends continue, the coming years could mark a complete redefinition of global wealth and monetary power. Precious metals, once treated as relics of an older system, may soon emerge as the foundation of a new economic order built on tangible value rather than inflated promises. As digital currencies and fiat systems lose public trust, nations and investors alike could turn back to hard assets to anchor stability in trade and finance. The gradual shift of gold accumulation toward Eastern economies suggests that global influence is already tilting toward regions that prioritize real assets over debt-based instruments. This transformation will not happen overnight, but the signs are becoming harder to ignore. The financial world appears to be approaching a breaking point where artificial liquidity and paper-backed leverage can no longer sustain growth. In that environment, gold and silver are likely to be revalued not just as safe havens, but as the true benchmarks of value in a fractured global economy. Do you think the future of money will return to real assets like gold and silver, or will digital currencies take full control of the financial system? Share your thoughts in the comments section below. If you find this video informative, don't forget to support our channel and turn on notifications to stay informed about our latest videos. See you in the following video.